This is Andrew Stotz of Stotz Investment Research, looking at my Thailand Equity FVMR Snapshot. Remember, FVMR stands for Fundamentals, Valuation, Momentum, and Risk. First thing we want to look at is the ROE, the fundamentals of the Thai market, and we can see that they're just about in line, we can see, with the rest of the world. Not bad. If we look at dividend payout ratio, it's also about in line. And if we look at the valuation of the market, slightly cheaper than the rest of the world. We look at price to book, again, slightly cheaper than the rest of the world. And what we can see is that earnings growth expectations by analysts in 2017 is about 6%, half of the world's growth expectation. So maybe it's a slow growth 2017, and then growth comes back to in line. After that, let's look at the price and see the momentum in price. The price is up by about 16% over the last year versus about 12 for the global market. So it's done a little bit better there. If we look at the gearing, what we can see is 56 versus about 70. And this is based upon 2015 numbers. We don't have all the numbers in for the prior 12 months for all the companies, so this may be a little bit suspect, but a little bit higher gearing than the rest of the world. If we look at the volatility of the Thai market, well, it's a little bit difficult to compare one individual market of 12.7 against the world because that's fully diversified. But we can use this volatility to look at the different sectors. So let's take a look at sectors a bit to understand where is the money being made. The ROE of the infotech sector is pretty massive at 21%. We can see that the energy sector and, industrial sector is pretty low. And if we want to look at the PE, well, the PE of the energy sector is very low. The PE of some of the other sectors out there, such as healthcare, whoa, massive. In fact, if we look at it on a price-to-book basis, we can see it's almost 6 times price-to-book. Now, of course, people are expecting steady growth in earnings, but that growth's probably not enough to support such a high level of valuation. If we look at the financials, they're about in line with the region at about 1.3 and in line with the world when you look at financials, which tend to be pretty low. But without a huge amount of NPLs, this ROE is a relatively good number from what we can see there. And if we continue on and we look at EPS growth, we can see that analysts are most optimistic in the real estate and also in consumer staples industries. The sectors that have been hit the most recently is infotech and also healthcare. Well, we've seen the valuations pretty high, so it kind of makes sense there's been a bit of a hit there. And the biggest gainers, of course, are energy, which is a recovery in oil prices, and also consumer staples. Finally, if we look at the balance sheet of the companies, many of these, let's say the infotech sectors, almost net cash, very low amount of debt, also consumer discretionary, healthcare, very low levels of debt. And finally, let's look at the high versus low volatility sectors. The highest volatility sector is the infotech sector, and the lowest volatility sector is the industrial sector. That gives you an idea of what's going on in Thailand. Basically, it's about in line with the rest of the world, except EPS expectations for Thailand are half of the world's expectations for 2017. If you want to look at your own country, just leave a comment below, and I'll do it if I have it. Have a great day.